So today we're going to be going over my trades that I took this week, the week of January 20th. First off, I do want to kind of give an overview of the strategy that I have been trading, and then we'll go ahead and deep dive into the setups that I took. So starting off, my strategy, if you guys don't know who Tom Trades is, definitely check him out. He gives a very simple approach when it comes to strategy, and he very developed and skilled trader, creates mind maps, and I found it very easy to just learn from the strategy. So if you guys are in the position where you're stuck and you don't know what strategy to go with, I'd say give Tom's a try. He goes very in depth into the higher time frames and how to trade it on the lower time frames. He it's just very informative overall. But I'm just going to do a quick overview as to what the strategy is, and then we'll go ahead and deep dive into the trades that I took. So number one, you want to figure out the direction, right? Price moving bullish or is price moving bearish? You have higher time frames, and then you have lower time frames. Don't mind the messy ass writing. I'll probably do the text. Let me actually do it like that. You have higher time frame. You can include medium time frame as well, and then you have the lower time frame. Higher time frame for me is usually the 4 hour and the 1 hour. Medium time frame will be the 30 minute, and then the 15 minute, and then lower time frame 5 minute and 1 minute. So yes, I do pay attention to all of these time frames daily. I'll take a look at it here and there just to gauge as to what the market is doing on a day-to-day basis. But overall, these are the six main time frames that I do focus on. Um, let's see. So yeah, figuring out the overall direction is, I would say personally, is the hardest part, right? Because price is fractal. So you can pull up a 5, 15, 1 hour chart. And if you don't show the time frame that it's on, you're not going to know you're not going to know if it's a 1 hour, 4 hour daily. They're all prices fractal, right? So when it, what I mean by that is, and the reason why it's hard is because the 4 hour might be showing you that there is bullish momentum in the markets, but lower and medium time frame might be telling you it's bearish. So that's kind of very conflicting, right? You might be looking bearish on the smaller time frame, but on the larger time frame, you're looking bullish. So how do you trade it? Well, one thing you need to know is price is, like I said, fractal. So if you want to be able to time the trade right, you need to know when the market is moving, and you can do that by aligning time frames. And so what I like to do personally is first take a look at the 4 hour. I With the 4 hour and 1 hour, I pay attention to the market structure, but I don't give it too much weight because I'm not looking to swing trades for hours or days. I'm looking to just scalp the move, be in and out with 5, 10, 15, maybe max an hour, right? And so let's say, so with that being said, I put a lot more emphasis on candle behavior, right? Candle behavior is essentially market structure just simplified on a higher time frame. And a way Tom explained it is in this very great analogy is you think of it as like the pixels on your TV, right? You have, how do you even say it? You have 480p, meaning, it's very pixelated. You're not getting as much detail. And that can be like the 4 hour and the 1 hour, right? So like let's say if this is a bullish candle close and then oops, and then you have an let's say a bearish candle close. Let's say that is red. Okay, you get that idea. Let's say this is the 1 hour chart, right? So the 1 hour shows two candles. However, if you zoom in onto the 5 or even 15, this is what you're going to see, right? You're going to see price start here, open, and then most likely trend up, close right here, push higher, and then create that wick. Let's say there's a wick right there, and then close right there. So on the smaller time frame, it's essentially giving you the details of the larger time frame candle. And that's kind of where candle behavior and market structure come in. If you're able to align candle behavior with market structure in the lower time frame, you'll be able to get a good gauge as to when to get into, let's say, a long or a short, depending on your bias. But I don't want to get into much. I don't want to get too deeply into that. That could be another separate video on its own. But that's pretty much what I use to figure out direction, aligning higher time frames with the medium and lower time frames to place my trade, knowing when to get into the market. Also, very important, trade at the same times. You'll see the same patterns. I trade New York Open, but I wait. New York Open is at 6:30 for me. I'm on the West Coast. And so 7 o'clock is when I tend to look for trades because at 7 o'clock, that's when you have all the time frame alignments. You have the 4 hour candle close, the 1 hour candle close, 15, 5, and 1 minute. And yeah, so we'll keep it there for now. So number two would be areas of interest. Again, don't mind this sloppy writing. I should have a trackpad or something. But areas of interest. So how do I identify areas of interest? It's pretty simple. I would just identify area where there's support or resistance, where candles have, bounced or rejected multiple times, or I mark out key levels. And how I mark out key levels are usually just by the 4 hour and just taking a look at the 4 hour and 1 hour and seeing where the candles closes, right? So let's just say this is a 4 hour candle close, bullish, and then it has to be a bullish to bearish, bullish to bearish candle close, and then we have a bearish candle close. Let's say like this, and then just like this, white. So let's say this is the bullish candle and this is the bearish candle, right? Bearish candle close. This is my level. Comes from the 4 hour time frame. Bullish to bearish candle. That's it. So that'll be my key level. And then if you have support resistance, just mark it out as a zone. And that's pretty much my areas of interest. And then number three, entry model. Where is this? Oh my God. Am I tweaking right now? Am I fucking tweaking right now? Where the fuck did it go? So what I like to wait for is a type 3 shift. So you're waiting price to essentially you're seeing price trend, take out a previous low and then continue higher, right? So let's say price you're looking for bullish swings, bullish position. You're looking for price to create a lower low, lower high, lower low, and then immediately take out that high after taking that low, and then you're looking to take an entry right off of that pullback. And what that does is the reason for this entry model is if you sometimes you might hop in too early. What you like to do is wait for a price to stop out. Let's say you like to see price stop out these weak buyers right here, and then immediately take out the sellers that were essentially trying to continue this trend. And that's usually a good sign of reversal on the lower time frame. And usually this will be on the 1 minute. And then for the bear scenario, you see the same thing, right? You see that shift in structure, make a low, break that high, immediately break that low, look, take sells on that pullback for a nice trade. And this is something to note. You don't just take the entry based off of the 1 minute only. You need align time frames, like I've said, right? Because the lower the time frame, the less weight that it holds in the market. So you can't expect a market structure shift on the 1 minute to immediately just move the market bullish. Like it doesn't work like that. You have to align time frames. So that's where using the 5 and 15 minute come in. And that's pretty much just the basics of the entry. But when we're taking a look at the higher time frames and lower in the medium time frames, we do focus on something called the type one and the type twos. Type ones is essentially a bullish to bearish candle close. Type one bearish would be a bullish to bearish candle close, where now you would expect to see price make a when the new candle opens. Oh, when the new candle opens, you're expecting to see price put in that upper wick and then flip to go bearish. Same thing with bulls. Let's say if it was a bearish to bullish candle close, say it looks something like this, right? Now you're looking for price to open here, move bearish, and then flip to go bullish. And that flip is the market structure that you would see on the lower time frame, right? Price is always a push and a pull. Like I said, we'll get deeper into that another time. But that's kind of an overview of what the strategy is. Um, yeah, so now I want to go ahead and get rid of this. Okay, so now I'm going to go over the trades that I took. You have a basic idea of what the strategy is. Simple three-step process: direction, area of interest, entry model. That's it. Okay, now we're going to go ahead and stop sharing this one. Now we're going to go ahead and hop into the trades that I took for the day. Okay. So starting off with this first trade was taken on NASDAQ on the 21st at 7:17. Holy shit. I have fucking something in my nose. Fuck off. Anyways, this is the first trade that I took over the week or during the week on NASDAQ. It was a loss. Market conditions I deemed for it to be trending. P&L percentage, this should be a negative actually. And oh yeah, let's go ahead and kind of quickly overview what I look for or how I journal my trades. So I mark out the condition or the outcome of the trade. Was it a win or a loss? Market conditions were we trending overall? Was a higher time trending? Are we counter trending? All that stuff. The pair we have NQ. Main ones are these three. I should actually get rid of these. But gold and Nasdaq is what I've been focusing on a lot more. But yeah, just those two pairs for right now. Position, entry time frame. So this is a time frame alignment. This is why I trade after 7 because when you trade after 7, you have all those candle closes. That's solidified data in the market. And you can utilize that to figure out your overall bias and figure out when to get into the trade. So overall entry time frame, we have 1, 5, 15, 30, 4 hour, 1 hour. Like I've explained, the day, month, the type. We'll go over the types later. I'll go ahead and show you later as well. They count, time frame alignment. This is based off of the different types that we've had on the larger time frame. So did we have a type 1 on the larger time frame, type 2 in the larger time frame? Did we get the type 3 on the lower time frame, et cetera, et cetera. Market, was I marketing into the position or did I set limit orders? What were my learning lessons? My RR for that trade, and then the setup, and then session time. Session time will be based off of, so we have Asia hours, which I don't trade at all. Mostly focus on these two. Am I trading before 7 or after 7? And then we have the time frame types. So we'll go ahead and get into that. But pretty much this trade on NASDAQ was an attempt short on the market. We did see a nice downtrending move on the lower time frame, as you guys can see, just currently trending bearish. And first starting off on lower time, larger time frame, after the seven o'clock candle close, it was this candle right here. We did have a bearish candle close, and so hence my thesis. Stacking the time frames, we had bearish on the 4 hour, bearish on the 1 hour, bearish 1 hour candle close, 30-minute candle, also previous candle close as well. 15, very strong bearish candle close after 7:15. 5 minute had a bearish candle close as well. So we had all of these bearish candle closes. And so I was very heavily bearish because we had all these candle closes, right? And so when we had that nice shift in structure where price was, trending lower, we attempted to break higher, which failed, but failed. I think that price could have attempted to clear this a little bit better, but we immediately failed. And then price did pull back into this area of interest in which I was very confident into taking the trade, placed my entry short, and then the outcome, well, resulted in an L. And the learning lesson that I had for that was, it was a good lesson in inevitable loss. We did get a close beyond the level on the 5 and 15 minute. Overall structure in the area was putting in a higher low, on the reversal, was looking for markets to pull back and continue lower, but markets wanted to reverse. And yes,
Run hit it.
yeah,
Is that good?
yeah.
I feel look like it's not the same, right?
It's still good.
I feel look like it's not fatty at all. Something different.
That's good. That means that your body is cutting down on fat.
Okay. Tomorrow, you will bring your name, but biếu ông bà nha. You know how to say, right?
No.
Bảo chứ con mang ít nem nem để đến Tết cô chú whatever. Okay.
You mean for Shay's parents? Or for Bad?
For sale.
Okay.
How many do you want to bring? I have, if you want a 24 or 30.
24.
Okay, you can get 24 and wrap some.
Okay. Sounds good. I'll ask you how to say it later. Sorry, guys. Gonna continue. So 1 minute was obviously trending bearish. So I was overall bearish, 5:15. You get it. So here we have the time frame types. So the 1 minute type 3, we had that shift in structure. I was waiting for price to break below. Got it on the retest of this key level that we had on the 15-minute. As you can see, bullish, bearish to bullish candle close, marked out that level. Also area of interest as well, because here price acted as resistance, treated as a support, was looking for the same reaction after that closure below. We were looking for price to flip. My mistake, or I guess something I could have considered in the markets, was taking a look at this, right? Overall, we are, I want to say, pretty bullish. We do see that price did reject this area right here, and we put in a lower high. However, this is the larger time frame protected low. And well, if you take a look at the trade, right? Price had a pretty extended move to the downside already. Like a very decent extended move, right? If we take a look at this 15-minute candle closure, we did close all the way down here and we did take out these highs. However, this area was the protected low, and just kind of looking at this retracement, it does look like just like a higher time frame pullback for price to potentially continue upward, which ended up happening. That's what played out. I think that overall that it still would have been it was a good setup. I think that if price didn't retrace or pull trend lower so deeply on the 1 minute, that it would have been a better trade if let's say if it closed right here, pull back and then went lower. But it is what it is. I didn't see that, and yeah, move on. 4 hour definitely looks trending bullish, right? As you can see, we're making higher highs, higher lows, higher highs, higher lows. We took out these lows right here, but we never closed below it. So the market on the 4 hour didn't solidify that bearish shift in structure just yet. Tapped into this area of imbalance, which is essentially a gap in price, and then reversed. So this is 4 hour was definitely looking a little bit more bullish. And yeah, that was the first trade of the week. Took it, took that lesson, and it was a very good lesson. So now we get to apply that into the next trading sessions. Um, what is going on? What the hell is going on? Okay, now we'll go into the second one. Trade number two. Trade number two was it ended up being on gold and market conditions. We were following the trend on this one. Um, P&L 0.5%. I did size down on this one because first trade we took was an L, and we had for the entry time frame alignments, we had the 1 5 15 1 hour and 4 hour. Nice, very nice continuation move. Something I did want to keep in mind is that this trade was taken in a higher time frame area of interest where I thought potential sells could be playing out. But I remember one thing I do remember learning is just because we're in an area of interest where you're anticipating sells doesn't mean you should be taking sells. Remember, I had to remind myself that I do scout the markets. I have to pay attention as to what the market is telling me. If the market is overall looking bullish, focus on taking buys. Don't be the first seller. Never be the first seller. I noticed that's how I got burnt out many times. Just taking a look at this journal, I've journaled maybe 90 trades using the strategy. One thing I noticed was that if the 5, 15, and 30 minute are looking extremely bullish, and I tried fading the market on a 1 minute structure shift, always got burnt. Like win rate was, I think, at 10 to 20%. But the moment I focused on just following the trend, it was so much more laxed. You know that the overall time frames are moving bullish. Why not follow the trend, right? So we start with the 4 hour as we always do. We see that the 4 hour closed extremely bullish, right? And then 1 hour also closed extremely bullish. You can even say the 4 hour had a type two bullish close where it closed beyond the level. And then on this new candle, when you're looking for a bullish setup on the larger time frame, what you want to see is the larger time frame candle to put in that bottom wick first to then flip and then move bullish because you just have more of a range to play with. And it gives you more confirmation as well. 30 minute, we did get that bearish candle close. However, it wasn't an engulfing candle close. Sure, it was a type one bearish candle close, but just overall, 30 minute, sure, candle behavior did close bearish. 15 minute, we had a type one bullish candle close. So going from bearish to bullish, we had a nice bottom wick being put in, and then price flipped up to close bullish. And then also 5 minute, zooming in, type one bullish close as well. Actually, you can even say type two. We closed beyond this little level right here as well. Remember, levels come from bearish to bullish or bullish to bearish candle closes. This one would be considered one. And so on the smaller time frame, after seeing those confluences, seeing all of those time frame alignments, I was being patiently just waiting for a shift, right? We see that right here, price was trending higher in a way, moved higher, based here, broke this low, and then I saw it as this shift right here. This was our 1 minute high, broke above that. We retested this area of interest, got into longs, and then just rode it up to the first 1 minute high because I definitely could have held this trade a little bit longer, but my reasoning for getting out a little bit early was just because a higher time frame, we were in that area of interest where I thought potential sellers could be in the market. So that was a scalp for that trade on the 21st. So ended that day for 1 for 2. Very nice, very clean setup. Left emotions out of the market and just moved on. Didn't take any trades on Wednesday, but Thursday we did get a nice trade opportunity. I believe Wednesday there was just some sort of news or something that was choppy, or I don't know. But we only took one trade on gold. Been loving gold so far. Took it long, and yeah, we'll go ahead and see what the trade looked like. Nice trade. Did a good job taking off contracts. I did scale out. I was in, I believe, three cons. Could have definitely held for a higher target, but at this time, I do remember Trump was speaking at 8 o'clock, so I did not want to be putting risk on in the markets. But overall, higher time frame continuation. Oh, one thing I do remember about this trade was that we were ranging, right, quite a bit. So let's go ahead and take a look. So 4 hour, we did have a previous bearish candle close, but if we take a look at the market structure, right, we were trending bullish and price tapped into this area and had a reaction. So 4 hour, although it closed bearish, market structure was looking bullish. So we have one bearish and one bullish right now. If we want to play, if you're trying to find bias, you can do it like this. Identi Identify the market structure and candle behavior in the larger and lower time frames, and then outweigh, and then just kind of put it on a scale, right? So right now we have one bearish, one bullish. 1 hour, we have very bullish. We have bullish market structure as well. As you guys can see, we have this low, made high, we pull back, reacted to this low, and then we also had a 1 hour bullish candle close as well. This, however, if we take a look at this market structure right here, I would say it is pretty bearish, right? So we have bearish 1 hour candle close or bearish market structure to the downside as we pay attention to the most recent price action. But we have a bullish reaction out of this key level right here on the 1 hour. And we have a bullish candle close at 7 o'clock. So two bullish, one bearish for the 1 hour. So overall, we have three bearish and two bullish overall. So overall, feeling bullish, right? 30-minute, same thing. Structure is looking overall bearish, reacting to this area of interest. And then we have multiple bullish candle closes. So same thing. Two bullish, one bearish. 15-minute entry was quite iffy, right? If we take a look at the 15-minute, just zoomed in, we are kind of in a bearish looking scenario. But if we take a look at this, price did close above this area. So we do have a 15-minute market structure shift. So that's bullish, but we have a bearish candle close, bearish. And we're also reacting to this area of interest, which is bearish as well. 5-minute, looking a little bit rangy. So no bullish or bearish bias on the 5-minute, but we do know that if the larger time frames, and also we have one medium time frame heavily weighting over on the bullish side, I felt comfortable taking buys. So entry was on this 5-minute candle where the previous candle was bullish. So we have a type 1 bullish on the 5-minute. We have a 30-minute type 2 bullish. We did close beyond this level. This area was acting as resistance. And then we also have the 1 hour type 1 bullish with the 4 hour reacting to a higher type of area of interest. And so if we take a look right here on the 1 minute, it was looking extremely rangy. There, I was at first I was taking a look at this potential type 3 right here where price was trending. We took out the low, pulled back, moved lower, and then we took out that high. This could have been an ideal entry with the stops below the lows. However, I wanted to be a little bit more patient just because we did react to this higher time frame area of interest after that 1 minute shift. If we zoom out a little bit, that area of interest came from this area right here, right? We bounced the previous day, closed below, retesting that area, but I knew that if I was going to be scalping, I just needed more confirmations, right? And so I was just patiently waiting for some sort of type 3 shift to happen. We didn't really get a type 3 shift, or we were playing like a larger type 3 shift, but looking for just confirmation to continue the trend, right? So we're pulling back. We take out these highs right here, making higher highs. And I got in on this little area of imbalance right here with stops below the lows, assuming that if buyers wanted to see this continue forward or continue moving higher, we would protect this low and then continue trending. And the reason why I cut it off right here to run these highs was, like I said, we had that area of interest right there. But what I could have done better was at least keep one contract to see if I could let price run. But other than that, it was a nice dub to end the week. It didn't trade on Friday just because I didn't wake up in time. I had some stuff to deal with this night, work related stuff. So Yeah, but other than that, that's those are the three trades for the week. And I'm very happy with the outcome. I'm very happy with the way I was able to stay patient. I want to continue cultivating that, obviously. But other than that, that's pretty much going to be the trade review. We'll go ahead and wrap it up there. But I think at least once a week, I plan on just making longer, lengthy videos. And I'm doing this also to work on my speech. I do notice that I stuttered quite a bit, but I want to record this really raw so that when I look back at these, it's gonna show some sort of improvement for sure, as long as if I keep this up. So that'll be it for the trade review for this week. Appreciate you all for joining, watching, whoever's watching this. This is my journey, and I'm very excited to let 2025 just unravel itself. And yeah, we'll go ahead and see you all next week. If I take any trades, you'll see it in short form content. But other than that, you can follow my Instagram at official BP trades. And yeah, I'll go ahead and see you guys then.